My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramer. The people who make friends, just trying to make you some money. My job, not just entertain, but to educate, teach. So call me at 1-800-743-CNBC. Tweet me at Jim Cramer. Well, at least that's over with. I'm talking about the fact that Fed Chief Jay Powell spoke today, agreed to raise interest rates 3 times next year like we thought, made it clear the economy is very much on track like we thought, but inflation needs to be curbed before it destroys our collective purchasing power like we thought. We ended up rallying hard after Powell's comments, in large part because the big bad event is finally over. The Dow gaining 383 points, the S&P jumping 1.63%, and the NASDAQ, which had been getting down there, someone giving it the business every day, well, the NASDAQ exploded 2.15% higher.
House of pleasure.
The whole thing was like a bit of a Rorschach test, wasn't it? Some commentators thought that Powell had suddenly become very hawkish by introducing the prospect of 3 rate hikes next year. Others found him too dovish, not doing enough to tamp down on wage inflation or ease supply bottlenecks. They wanted the kind of economic carnage that Powell unleashed by accident in late 2018, something I doubt he'd do again. However, if inflation stays red hot, it's clear that he might be willing to keep tightening, even as the current plan is to stop by around 2024. But he's flexible. That plan will change if the data changes, and the Fed funds rate could end up going above 2%. The Fed will do what's prudent, especially if the pandemic stays with us. In short, Powell once again threaded the needle. That's why the stock market could turn around and soar, led by profitable growth stocks, like my favorites, like Eli Lilly, which I tried so hard to get you to buy in our club meeting last week, rallied 10% in a single session. After the recent pummeling, these profitable growth stocks, which are the ones you know I favor, well, the selling in them, the respite, well-earned. More importantly, because Powell had already signaled that something like this was coming, the stock market had already baked in the damage and applied it to every sector, which is what else allowed us to rebound today, when it became clear that his bark is more powerful than his bite. Ever since Powell went nuclear in the economy in late 2018 and then swiftly had to change course, he's been a very measured and thoughtful Fed chief. For example, he said repeatedly that he doesn't want to slam the brakes on the economy, start raising rates, until we see more gains in minority hiring. He's always looking to help the disadvantaged. Man, that's a new thing for a Fed chief. But today, Powell said we're finally making headway, and while he's a pretty subdued guy, he was obviously happy to have held rates low enough to accomplish that mission in his life. In my adult life, I don't think I've ever seen a Fed chief who prioritizes Main Street over Wall Street like this man. Plus, Powell's not a bonehead. He doesn't say anything about the pandemic except to point out that the more people who are vaccinated, the better the economy will be. That's a fact, although it's one in millions are in denial about. He's not a clueless taskmaster either. Powell doesn't make stupid predictions about how rich he's going to be. No vows to hit us with lockstep like he did 3 years ago, saying that we got a rate hike. He's sensitive to the power of his own words now, even as the questioners either want him to blunder or want to test his conviction. He's not an ostrich. Powell recognizes that we've got all sorts of inflation, although he also knows that commodity inflation has already been tamped down by his recent pivot. Lots of major commodities have already come down substantially from their highs. Think oil, copper, steel, just based on recent remarks. His words were his deeds. Now, just like the reporters who try to trip Jay up, there are traders who got tripped up by his common sense approach. I'll give you a couple examples. First, the bank stocks turned down today because going into today, some traders believed that the Fed would screw it up, tighten rapidly. Remember, the banks make more money when short-term rates go higher. I guess they thought Powell was Bozo the Clown. He outwitted these people when he brushed his teeth and buttoned his shirt this morning. There were others who kept selling the best growth stocks right into the release of Powell's statement. I want you to think of companies like AMD, Salesforce, Apple, amazingly profitable, because they expected total carnage in these names. Again, it's like they never paid attention to a single word this man has said. So what happens now? There are a couple of ways to go. First, we could be looking at the beginning of the long-awaited Santa Claus rally that I keep talking about. You can't rule it out, given there's nothing on the calendar that could derail the market between now and the end of the year. I mean, historically, this is it. Historically, the Santa rally doesn't usually come until a few days later, but it wouldn't shock me if it already started. You know Larry Williams, the legendary stock market historian, and I are banking on this one, so instead of this...
All aboard!
Second, some investors might not realize that we aren't going back to where we were before Powell's pivot. Don't go back to some of those stocks. While Jay's not explicitly trying to annihilate the cloud-based software and database stocks with huge addressable markets powered by land and expand strategies, in other words, the money losers that trade on sales, not earnings, his pivot was the sign to lighten up on the whole group, okay, the whole group. Powell did not say you should dump your Robinhood. He did not say you should dump your AMC. He did not say you should sell your GameStop. He did not do those things. But they simply don't work in an environment where the Fed is no longer your friend. Those stocks that sell at 10, 20, 30, 40 times sales, forget them. They've made their money for you. Go for profitable growth, okay? Profitable growth. Third, Powell will immediately be second-guessed by supposed experts who shouldn't even be allowed to shine the guy's shoes lest they get kiwi polish on his cuffs. These professional second-guessers, including professors, hedge fund managers who are short the stock market, and highly paid economists, often looking to preserve their jobs at all costs, well, they want the Fed to carpet bomb the economy in order to stamp out inflation as soon as possible. You cannot afford to listen to these people. You will never make money. You will be in your financial chains. If, like my charitable trust, they actually showed you in real time what they were doing in their money, I'm betting that they're doing somewhat of the opposite of what they say on air, because otherwise, man, they'd be out of business a long time ago. Fourth, there will be a pack of jackals eager to start speculating right now, tomorrow morning, about how the next Fed meeting is right around the corner, and when it arrives, Powell will have to tighten a lot tougher because inflation's still raging. These people, I say they are of zero help. I think there's actually something pathological about them, too. I mean, they can't stop talking about the next meeting. It's like they have nothing else in their lives. These people must find other hobbies. What matters in the end is that Powell's taking action to slow the economy now that he's gotten the unemployment rate back to 4.2%. I say the guy deserves a victory lap. So let me tell you, if I were in one of those squares, I don't know if you watch, you probably didn't even watch it, but there's like these big Hollywood square games with all these faces. If I would have been one, those are the press people. If I had been one of those, if I were in the audience at today's press conference, and he called on me to ask a question, me, here's my take. I would say, Chairman Powell, I want to thank you for being a person of your word, a Fed chief who cares more about the persistent downtrodden rather than persistent inflation. You correctly navigated the pandemic and are committed to continuing to do so. So thank you for not falling prey to hysterics about the various strains. You saved millions of jobs with your considered words during the downturn. You did not freak out because of strong hiring or strong spending, as it didn't require credit. And most important, you were the only non-political guy left in Washington trying to help the people who've been left behind rather than worrying about keeping your own job. So, Mr. Chairman, here's my question. Chief, what's your favorite drink? Let me say in your case, you and your family have a safe, great holiday. Thank you very much. See you next year. Here's the bottom line. The market's entering a new phase here, but as long as Powell's in charge, I think we can expect a soft landing and a lot of good stocks to find. Just not as many as before. I think it's Diet Ginger Ale.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.